Hello, I want to have a short conversation about what are the things that an accountant, or if you're doing the accounting and bookkeeping for your restaurant, what are some of the things you want to keep an eye on? What are the things that can make unique or might be tricky for a restaurant owner? And some of the things added services or added work that an accountant can do for you to elevate your business to the next level. So the first thing that we obviously have to talk about is petty cash. Petty cash is basically how much money is in your cashier, and you're usually going to do this on a daily basis. It's not really complex. It's just how much, what was the starting balance at the beginning of the day for the cash. How much cash do you have in your cashier, and then you're going to subtract, or you should keep track of every time you take money out of the cashier, and every time you put money into the cashier. So it's not really complex. It's just adding every payment from the clients that paid in cash, and then subtracting any payments you did in cash, or anytime you get a client change, and that should equal the ending balance at the end of the day. You can also do it on a weekly basis. It really depends on how much workflow you have. If you have a very small business, or maybe during the week it's not really busy, it's the weekend days that are really busy, well, you could probably do it only on Friday, and then over the weekend do it on a daily basis, or maybe even 8 hours, every 8 hours. I think that's the way it works for convenience stores, for your grocery stores, your fast food chains. They do that type of count for petty cash every shift, probably every time somebody is closing their shift. I believe that's the way it works. But it really depends on how much people you have coming in. If you don't have that many transactions during the day or during the week, as I said, you don't have to do it on a daily basis. You can do it on a weekly, or you can wait for the weekend when it's more busy. Now, other things that you have to care about, obviously, like any other business, you have to care about your bank reconciliations. Make sure you're doing that at least on a monthly basis. Again, depending on how much work you have, but ideally you want to do it on a monthly basis. If you're really busy, you probably want to do it on a weekly basis. And if you're super busy, I don't know what you're doing watching my video, but then you want to do it more recurrent. But for the most part, every small business, every local restaurant, you're gonna probably be doing it on a monthly basis. Make sure, for convenience, link your bank account, your business bank account, and all the business credit cards. Link them to your accounting system. QuickBooks, which is the most famous one, QuickBooks Online really makes it very effortless when you link your bank accounts, instead of having to export the bank statements from your bank and then exporting it into an Excel file and then uploading it to your accounting software. Just make it easier on yourself and on your accountant, and link your bank to your accounting software. But yeah, you want to be doing that on a monthly basis, at least your bank reconciliations. Then you want to make sure about your accounts payable. You might get credit with some of your suppliers. You might not. You might be just buying your supplies on Costco or Walmart or any other grocery store or convenience store. That doesn't really matter, but just make sure you're keeping all of your receipts, so you can deduct them for your taxes on your tax return. That's very simple and straightforward. If you do have credit with some supplier, then it gets a little more tricky. Make sure you are paying them on time, and I think that will be it. And yeah, I think that will be it. Now, inventory, it's one of the big things for restaurants and any business that sells physical goods or services, because you don't want to keep inventory that loses its value. And for restaurants, that happens very quickly as food expires. So having the proper, knowing how much to buy, and looking at historical data to know, okay, I have to buy this much supplies, I have to buy this much raw food to cook, because this is how much it usually sells, and I might have a little bit more just in case we have something big, like, I don't know, an NFL game or something, and a special event where you might expect more clients than usual. But buying too much, you're gonna be having a lot of inventory that might get wasted, might get expired. And buying too little, well, of course, you're gonna be losing you're gonna have an opportunity, you're gonna be losing opportunities of making more revenue, right? So those are the things that you have to look for in your accounts payable and inventory. Now we'll look into what liabilities can you have. Well, probably the biggest expense for any restaurant is going to be rent and employees. that's really very straightforward. There's nothing else to add to it. So those are the kind of things that you want to make sure that you look into. And I don't know if restaurants really should care about their profits and loss statement, because it includes some cash payments, non-cash transactions, such as depreciation and amortization. I would care more about a cash inflows and outflows statement, like a forecast, cash forecast, and because cash is king for this type of business. You're not living on credit, you're not receiving payments online, you're not doing this kind of stuff. You are using cash on a daily basis and to buy inventory, and you buy a lot of inventory. It's a high maintenance business because you have to constantly be buying a lot of inventory. You have to constantly be preparing the food, which means manual labor and man hours. So it is a business where I will care more about cash than about profit and loss statements. For anybody who doesn't understand why am I saying why it's not the same, your profits and your cash, you see, the profit and loss statement is going to include transactions that have not yet happened, or is accounting for a certain period, but you didn't necessarily took cash out of it to pay for it. One example, the perfect example is depreciation and amortization. If you have insurance, you have to be amortizing that over a year or 2 years, depending how your contract with your insurance is. But usually it's yearly, it's annually. And you pay that once. I don't know how much, I don't believe you're paying it on a monthly basis. Maybe you do, maybe you don't. But depreciation would be a better example. You buy a vehicle, you buy equipment, you buy machinery, and you buy a building maybe. And you buy that once and then pay it with credit the rest, and you might be paying credit back and paying back the loan, but you're not paying depreciation. That's something you already paid. All right, so you don't have to be including it in your profit and loss statement, or at least not for profit purposes, for somebody who wants to know how much cash they generate or how much cash they're burning. So I would care more about a cash statement, like I wouldn't say a leverage free cash flow, but I would care more about a cash forecast. Maybe a 13-week cash forecast would be ideal for a restaurant business, to see historical data and just to forecast for the future and the future weeks. I think that will be a very valuable statement that I will look for, and to keep control of all my payments, of all my suppliers, of all the credit cards, of all employees and payroll, to know when I'm going to need to use the credit card, when I'm going to be shorting cash, when I might need a little loan, when I might be able to have some extra cash, and what can I do with it? Do I just withdraw it for the business? Do I reinvest it into the business? Do I buy more inventory and come up with something special to try to attract more clients than usual? What is that noise? Oh, it's my eyes. But yeah, I will use a lot of cash forecast in a budget. That will be the main thing that I would be using if I was doing the accounting for a restaurant, or if I had a restaurant. That's the main things that I would care. Break even, not so much. If you're a newer restaurant, I wouldn't care that much about break even, just to make sure that I meet my debts, my loan payments, and that I'm cash positive, that I'm not burning cash. So those are the things that I would care about if I was a restaurant owner. If you find this information useful, please like the video, subscribe. I'm going to be putting more content about accounting and what are the things that you can look for certain types of industries, one of them being the restaurant industry. And if you have any other type of business, make sure that you keep an eye on it, because I'm going to be talking about home builders, I'm going to be talking about real estate agents, I'm going to be talking about real estate investors and people who have properties, law firms, accounting firms, retail stores. Accounting really, once you figure it out, you can kind of guess how everything works. I can kind of guess how, I might not know how exactly do medical clinics get paid, but once somebody tells me or explains it to me, I can figure out how the accounting looks like, and what reports they should care about, what metrics, what KPIs. So accounting is really not that hard to master, and especially when you have 10 years of experience, you better have mastered it already, otherwise you're kind of a dummy. But yeah, just subscribe, like the video, and we'll stay in touch. Bye.